JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 7th of October 2020. So yep, welcome everyone. Welcome to this Wednesday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website and specifically our JFD research page, which we also update on a daily basis. So yep, feel free to visit us here on jfdbank.com and click on the research tab right there on the top. So now then, the first index I really wanted to pick up on here, and that's going to be Nikkei 225, and here we can see, yes, initially the index kind of opened with a nice gap to the downside. Of course, given that the US equity market has sold off yesterday a little bit, but as you can see quickly, this little gap got filled. From the technical side, you can see that the index drifted lower, tested this area that I keep talking about this week, this 23,300 zone, and it also tested that 21-day EMA. So all this area did provide good support, and you can see that yep, we had a nice rebound and a push higher. So in a way, of course, this kind of gives a chance for a possible move up again. However, just to be on the safe side, maybe I would prefer to see maybe a push above the current highest point of this week near the 23,441 zone. A break above that, yep, may clear the path towards this other key resistance territory that I keep talking about, this 23,580 zone, which, as you can see, acts as a very nice resistance, or I should say has been acting as a very nice resistance lately, and yep, a nice good, like I said, push above the current highest point of this week near the 23,441 could yep open a door towards that level right here. Of course, in terms of the downside, previously I talked about this area right here, the 23,040 zone, but if looking at this picture now, if we get that drop below this 23,300 zone or this 23,272 territory, this could also place the index below the 21-day EMA and lower levels could be met. So in a way, given that the index today showed that this is quite a decent area of support, if this decent area of support gets broken, now like I said, this is where it could become a little bit more interesting for the sellers. So that's why we could start looking at some lower levels, trying to capture some of these lower levels here if we get a drop below this 23,272 zone. Hong Kong's Hang Seng index also pushed higher. It performed much better, and it still is performing. It's still open. Still has around 55 minutes left, not well, short actually, a few minutes, but let's round it up to 50 minutes left of trading. In the index, you can see that it's pushing nicely above this downside line taken from the high of the 31st of August. Now, I talked about this index this week and basically in yesterday, of course, as well, and what I was saying that given that yesterday the index managed to already kind of close above this downside line, yes, this kind of increases the chances for a further push north, especially if it travels above the 21-day EMA. And look what's happening, exactly that. So it's pushing above that 21-day EMA. If it stays above this today, if it closes the daily candle today above this 21-day EMA, then of course it just increases its chances of moving further north here towards this towards the 100-day EMA shown as the green line, or even going towards this other downside line taken from the high of the 7th of July. So in other words, guys, as well, I mean, this move higher could still be seen as a temporary correction. So that's why for now, yes, we will be aiming higher, but we'll be very careful near this other downside line, this slightly flatter downside line taken from the high of the 7th of July. Jumping into the German index here, and here the daily candle, you can see that the daily candle managed to stay above this 12,873 territory. This is what I talked about yesterday, even in my Trader's Tea Time, if you've joined me there. Basically what I was saying, that yes, given the fact that we had a nice, very beautiful move here to the upside, the fact if it stays above the 21-day EMA and above this 12,873 territory, then it kind of still increases the chances for a possible move further north. Now, looking yesterday, the cash index on the German on DAX did fall lower. However, it did fall back below this 12,873 zone, but today, this morning, we're seeing this positivity that kind of is spilling into the U.S. futures, European futures. You can see that this positive is bringing back this index back above this 12,875 zone. So basically, the index currently is balancing just fractionally above this area and above that 21-day EMA. So all this is kind of looking still quite positive for the German index. So let's see if it actually can stay above this 21-day EMA, and if so, then yes, the next target is that psychological 13,000 zone that I kept talking about. If that gets broken, of course, yeah, higher levels could be met, but for now, let's keep it short and simple. In terms of the downside, if this suddenly starts dropping back below the 12,873 territory and falls below yesterday's low here near the 12,779 territory, then, well, I mean, we could consider maybe a bit of a decline here. However, with this idea of a decline, we should be very careful as well, because something, maybe me getting a bit ahead of time, but just kind of something for you guys to keep in mind. So let's say this index decides to push a little bit higher again, but fails to move above this upside line here, which kind of marks the peaks here, and then it starts rolling over back down and drops below this 12,779 territory that I kept talking about, and moves further south. However, be very careful then near this upside line here. And in other words, what we're getting ourselves here is a possible rising wedge pattern. But again, that's too early to talk about that. We need, in order to consider this as a possible rising wedge, a break of the lower side of it would be required. And of course, we would need to see the price kind of maintaining below this upper side of the wedge. So still kind of a lot of criteria to meet. So that's why I'm giving this as just as an idea for now, but the main focus right now is, of course, to the upside. If we get a nice push higher again, and maybe a push above this yesterday's high, then yep, maybe we could ignore this rising wedge in general, because again, for now, the market is a little bit tricky. Let's get rid of this idea for now. Let's not overcomplicate our life, but I'll keep this upside line for now, because at the moment the trend is still, the short-term trend is still to the upside, and actually the well, I wanted to say maybe actually the overall trend, but to be honest, overall trend right now is a bit moving. The trend is sideways, it's neutral. So yeah, let's see how all this is going to play out, and let's see if we can see. Let's see if we can get DAX moving further north. Now, jumping into the dollar index. Yesterday, the dollar index accelerated nicely, and this is exactly, guys, what I was talking about yesterday when I was mentioning that if this area right here, this 93.37 zone, does provide good support, then we could see the index reversing and pushing higher, maybe back towards this 93.82 zone, which it happened exactly that. So this is where I was saying that be very careful, because if we get a further move higher and this downside line breaks, well, I mean, this is where it could lead to a change of the current trend, and we could see this one pushing further north. Now, if you remember yesterday as well, I was talking about the RSI, and yesterday the RSI was just bang on this upside line, and what I was saying yesterday, that keep your eyes on it. Don't rush into anything yet, because we need to see how all this is going to play out. And for now, you can see that the RSI is still climbing higher. It rebounded from its upside line. So now the big question here is how this is going to play out. Now, we are at a critical spot. We do have some news coming out today. Of course, keep your eyes on the FOMC meeting minutes, which are coming out later today, and of course with the statement. So that might give the US dollar a bit of movement. So of course, let's not over speculate on all this. Let's see when the news comes out, and let's see what the reaction will be. But for now, the downside line is still here. It's still in play. If it continues to provide resistance, then another round of selling here could be possible. Now, jumping into gold, and of course, given the US dollar strengthened, we saw the US. We saw the US, we saw gold declining, and basically this is what I was talking about this whole week, guys, to you, that I was telling you to keep an eye on this downside line. And yesterday when I was covering gold, I was saying that if this downside line taken from the high of the 7th of August continues to provide resistance, then yes, we could see another slide here, and this is exactly what happened. Now, if the dollar strengthens and continues to strengthen, we could see gold moving towards this target that I kept talking about, this 1848 zone, and then yep, we'll take it from there. But again, at the moment, everything seems to be working out nicely according to the idea that I've mentioned in the beginning of this week. So let's see if that happens, and let's see if we can actually get a further move lower. Now, jumping into Bitcoin, Bitcoin, again, something that I've talked about this week, and I was telling you guys to continue monitoring this one, because at the moment we're a little bit on the neutral side, because we are still stuck between these two, actually more of three lines here, but we are stuck in between these lines. So for now, until we get a clear break out of this, we're not really doing anything, and for now we're just observing the price action, but again, it could be quite an interesting one to keep an eye on. ADNZD here reversing back up, and yesterday I talked about this pair and was saying that if we get a further move below the 100-day EMA here shown as the green line, then lower levels could be met. But you can see that reversal happened. The pair is trying now to get back on track here to test this downside line. However, of course, even if we get a break of this downside line, to be honest, I prefer to see a push above the 1.0851 territory first before examining potential higher levels. So again, we are at a very tricky spot. Again, neutral stand, but it could be quite an interesting one later on. If this suddenly reverses back down and drops below this 100-day EMA, then yes, the next target is the 1.0718 zone. Now, jumping into USD JPY, and Here you can see that we are seeing a bit of a bullish activity here, and of course understandable. Yesterday the dollar strengthened, and the equity markets, especially the Asian ones, are recovering again. So and this is of course putting that risk on environment back on the table, and everybody's jumping out of the yen. However, this is a bit of a tricky situation, of course, because the dollar is strengthening, and the equities, the Asian equities, are also strengthening, bringing higher right now the US equity, US futures. So at the moment, if we just pick up on this, if we just pick up on USD JPY, also of course we'll keep an eye on today's FOMC statement, but from the technical side, if we get a nice good push above this 105.80 zone that I talked about yesterday, that's where it could become a little bit more interesting. We could see this one traveling higher, and maybe potentially actually hitting the 100-day EMA here, shown as the yellow line, the green line, or this downside line taken from the high of the 24th of March. Because don't forget that still this downside line is the one to watch, and if it provides resistance, then yep, another round of selling here could be possible. So again, be very careful for now. In order to consider the downside, we would need to see a drop below the 105.30 territory right here, and then yep, lower levels could be met. GBP and USD. So yesterday I talked a lot about this pair, and basically I was telling you guys to wait for this one, wait for that confirmation break above this 1.30 territory. And as you can see, the break, it happened fractionally, but to be honest, that's not really gonna count much. You can see that the pair drifted back down, and yep, now it's kind of it's stuck between the 21-day EMA and the 100-day EMA. So what I'm going to do here is I'm going to take a neutral stand, because all this is not really looking quite nice, I would say, because if you want to look at some lower levels, at least wait for a drop below yesterday's low here near the 1.2868 zone, and then yep, we could maybe consider a bit of a larger correction to the downside towards this upside line taken from the high of the 18th of May. But with the upside, well, I mean, the same game plan remains. We need that confirmation break above that 130 before we could examine higher levels. Euro NZD, I haven't looked at this one for quite a while, as you can see by the lines that kind of moved away here. But first of all, let me remove all the drawings, and let's have a fresh start. Now I want to draw a downside line here, but given that we had a bit of a spike here in March, to be honest, it's not going to be an ideal one, but I'm going to take a bit of a something which is going to be a little bit more accurate, I would say. Maybe yes, so the one I'm going to take it from the high of the 23rd of March here, but to be honest, okay, so yeah, that's, yeah, it's still tricky. So it's still tricky. So what we're having here ourselves is a possible kind of coiling up situation. So the pair, you can see it's stuck in between these two lines. Both tentative lines, of course, but nevertheless, I'll keep an eye on those two, because if, let's say, if we get a nice pop here above this downside line, then higher levels could be met. The only thing is that you could start looking at some higher levels if we already get a push above, somewhere above this area, because as you can see, this high of the 10th of September near the 1.7834 zone acted as a very nice area of resistance, and it continues to do so. So that's why for now I'm going to keep an eye on this barrier, and if that gets broken, then yes, I'll aim for some higher levels, but I'll be very careful near this downside line. It's although it's a bit of a tentative one, but nevertheless could be a nice opportunity here still. So this little kind of area is still providing a decent amount of pips. So again, wait for that confirmation break, guys, and then we could start looking at maybe examining slightly higher levels. And finally, Euro USD. So the pair is this is exactly what I was talking about yesterday, guys, and basically we didn't really get a strong move higher. This is why I was very cautious and skeptical yesterday, because what I was saying that yes, the fact that it was trading slightly above this 1.1797 zone, yes, of course, that kind of brought a bit of positivity into the whole near-term outlook. However, the fact that it was still struggling to move further away from this 1.18 zone, you can see that this is the result we got. We reversed back down and dropped back below this downside line taken from the high of the 1st of September. Now, to be honest, if it remains below this downside line, then yes, lower levels could be met. If you want to be a little bit more on the cautious side, what you could do here is pick up on this little territory somewhere near the 1.1706 territory zone here, or this actually here. Let me just capture this little swing, this 1.1696 zone, if you want to be a little bit more careful. But again, either way, this 1.17 territory, if we get a drop below that, then yes, there is a possibility for this one to move back down again. But if somehow this manages to get back to the upside, again, a push above this 1.18 territory, that's what we would need to see in order to aim for some higher levels. So guys, for now, that's the little kind of annoying game plan right now, but again, that's the situation, that's the the little time that we're living in right now. So let's see how all this is going to play out. But yeah, for now, keep your eyes on these two levels. So guys, I really hope you found it useful, and thank you very much for watching and listening. I really appreciate your time, so I hope you enjoyed it. If you want to catch my video later on, my trader's tea time is always 13:15 GMT. For now guys, I hope you have a wonderful trading day. Stay safe, be very careful, have your stop losses in place, and everything will be fine. See you later.